95 News. I'm your host Abhishek. Today I'm here with another episode of Quick Stock News. In this episode we bring up the latest updates and the week analysis of stock market. Before we get into the news, we request our viewers to please wear a mask and maintain social distancing as the battle against COVID-19 is not over yet. Remember, this is the time we fight the virus together. Stock market news for this week are: market end with marginal gains in a volatile week. Benchmark equity indices ended marginally higher in the higher volatile week ended April 8, amid mixed cues with HDFC Bank merger announcement at the start of this week. Fed's hawkish stance with stepper interest rate hikes going ahead and RBI retaining accommodative stance with the key rates unchanged. For the week, BSE Sensex was up to 170.49 points to the end at 59,447.18 Indian rupees, while the Nifty 50 added 113.9 points to the end at 17,784.35 Indian rupees levels. The BSE Small Cap Index surged 3.7% led by the Swan Energy, Sri Renuka Sugars, Suryodaya Small Finance Banks, BLS International Services, Onmobile Global, Zuari Agrochemicals, Ritel Corporation of India, Ramco System, Jaiprakash Associates, 3i Infotech, and Siaram Silk Mills. However, losers included Everest Industries, GRM Overseas, Future Retail, Team Lee Services, VMart Retail, AVT Natural Products, and Expelo Solutions. A BSE Mid-Cap Index jumped 3.5% supported by Bajaj Holdings and Investment, Tata Power Company, Bharat Electronics, Vodafone Idea, JSW and NHPC. On the other hand, RBL Bank, Rajesh Exports, Emphasis and Z Entertainment Enterprises amongst most major losses. The BSE Large Cap Index surged 1% with led by the Adani Green Energy, Ambuja Cements, FSN E-Commerce Ventures, Nykaa, Tata Motors, DVR, Havells India and 197 Communications. On the BSE Sensex, Hindustan Unilever added the most in the terms of market value, followed by ITC, ICICI Bank and Asian Paints in the last. On the other hand, Infosys, Tata Consultancy Services and Reliance Industries lost most of their market value. In the last week, the Indian rupee fell against the US dollar. The Indian rupee ended 12 paise lower at 75.90 per dollar on April 8th against its March closing of 75.78. Foreign institutional investors bought equities worth of 6,337.5 crore rupees, while domestic institutional investors bought equities worth of 4,161.54 crore. Among the sectors, BSE Power Index rise 9%. BSE FMCG Index gained 4.4% and Metal Index added 4%. On the other hand, BSE Information Technology Index fell 2%. Equity mutual funds attracts 28,463 crore rupees net flow in March. Equity mutual funds attracted a net sum of 28,463 crore rupees in March, making it the 13th consecutive monthly net inflow, amid a volatile stock market environment and continued FPI selling. In comparison, equity mutual funds saw a net inflow of 19,705 crore rupees in February and 14,888 Indian crore rupees in January. Equity mutual funds attracts 28,463 crore rupees net inflow in March. Equity mutual funds attracted a net sum of 28,463 crore rupees in March, making it in the 13th consecutive monthly net inflow, amid a volatile stock market environment and continued FIPs selling. In comparison, equity mutual funds saw a net inflow of 19,705 crore rupees in February, 14,888 crore in January and 25,077 crore in December 2021. Data from the Association of Mutual Funds in India showed on Friday. Equity schemes have been witnessing net inflow since March 2021, highlighting the positive segment among investors. Prior to this, such schemes has consistently witnessed outflows for 8 months from July 2020 to February 2021, losing 46,791 crore. Within the equity segment, and all categories saw such net inflows. As many of them ask, why option is better option in choppy market conditions? Here is your answer. The choppiness or the volatility will make sure that the rise in option premium due to extra movements is higher than the fall in premium due to passage in time. Volatile market always attract traders to trade more. This is because more volatility comes a lot of movement, and with movement comes a lot of opportunities to make money. However, one must not forget that increase in volatility also brings in additional risk. What flows has come from a lot of traders after seeing the decades of experience. As many of them ask why option is a better option in choppy market conditions, here is your answer. The choppiness or the volatility will make sure that the rise in option premium due to extra movements is higher than the fall in premium due to passage in time. Volatile markets always attract traders to trade more. This is because with more volatility comes a lot of movement, and with movement comes a lot of opportunities to make money. However, one must not forget that increase in volatility also brings in additional risk. What flows has come from a lot of traders after the decades of experience. The chance of hitting the stop loss and breaking down is almost equal to the chance of hitting the stop loss and reversing in volatile times. So here, options becomes a better option. If we had bought an option, we could have stayed in the trade without being worried too much about the strictness of the stop loss. We may just get alerted whenever the stop loss levels get hit in the underlying index. We can then trigger a stop loss on our option. Remember, in a worst case scenario too, we are not going to lose more than the premium that we have paid on the option, which is generally between 5 to 10% of the value of. That's the reason why option is a better option. That's all for today. Thank you.